Why does investing seem so hard and difficult to comprehend? It's as if no one knows what the index fund is. That's right, an index fund, even the almighty Warren Buffett recommends for all individual investors to have within their portfolio. In fact, Warren Buffett states, I think that the people who buy those index funds on average will get better results than the people that buy funds that have higher costs attached to them because it's just a matter of math. Now, what does Warren Buffett really mean by this quote? Well, Warren Buffett's considering that as an investor or an individual, you shouldn't really worry about index funds, stocks, or anything. It's more or less about the math itself. Index funds achieve a 10% rate on average over a long period of time. That means that you could, on average, get that return rather than owning stocks that may go up and down and you're worrying mainly about the statistics of that stock, rather than just buying in and having individuals worrying about it for you. Now, by definition, index funds are a basket of stocks that you can purchase on your own all at once in a collective group without buying individual stocks alone. It's like saying if you try to buy the whole entire S&P 500, it costs you thousands of hundreds of thousands of dollars to do this, rather than compared to like buying one sort of index fund and you own basically all those companies all in little small shares that are tracked entirely by the market itself. Now, these index funds can basically track the entire market relating to like REITs, which is like real estate, overall real estate property, businesses that track real estate, or it could be international market going from like different globes of companies around the world, from small stocks to basically like companies that are barely even known to like companies that are foreign. Samsung, Toyota could be the example, or it can be related to even the top 500 companies in America, such as Google, Apple, Nvidia, just a bunch of companies that you individuals most likely know today that can overall allow for you to own them all at once within just one index fund. With that being said, let's get into the top index funds that I believe you should have in your portfolio today. Starting with the well-known Vanguard 500 index fund, which ticker symbol VFAIX. Currently, it has over 505 companies in the portfolio, which means by owning this company, you nearly own 505 companies alone. Now, the expense ratio for the overall index fund is 0.04%. The expense ratio basically means the amount of expense that you as an investor have to pay for on a daily basis, and it's taken out of your overall profit from that index fund every day. Now, the overall 30-day yield, which is basically acts as a dividend yield, is 1.44%. That's over the dividend rate in which you can receive as an investor. And the average return rate over a 10-year lifespan is 12.82%, which is pretty high overall for like a good 10 years. Now, the downside about this index fund is that you have to have an initial investment of $3,000 into that fund in order to gain access to it. So for individual investors who have little to any capital, it's mainly going to be hard for them to invest that amount, and it's best to just save up and probably put your money when you have the right time. It also could be different. You could have fees depending on certain brokerages that you're purchasing this index fund from. The next on the list is a well-known Vanguard 500 index fund, ticker symbol VTSAX. This overall fund not only includes the 500 plus companies in America, but the overall exposure to the majority of the entire market in the globe. Now, VTSAX is a Vanguard total stock market index fund. Now, this fund currently holds over 3,859 assets. Its overall expense ratio is 0.04%, which is the same as the Vanguard 500 index fund. It has a yield, a 30-day yield of 1.41%, and its overall 10-year average of market return is 12.07%. The downside is that you have to invest just about the same as $3,000 for your initial investment, so you basically have to work with more capital than as opposed to investing in, a stock alone. With this, our next one is an S&P 500 index fund tracked by Charles Schwab, known as ticker symbol SWPPX, that has a goal of maintaining a long-term average of the market while staying at a low-cost fund basis. Now, this fund currently has 505 holdings, has a low-cost expense ratio of 0.020%, with a 30-day yield average of 1.41%, and a 10-year average market return of 12.80%. The upside about this is that you don't have to have initial investment of at least $3,000. You can invest and choose to buy this overall index fund at any cost, unless it depends on the brokerage in which you buy it from. It can also charge you a fee and an initial investment minimum. Finally, the last index fund is a well-known index fund for its overall low cost and overall great average in the market, and I currently own some. It's the Fidelity 500 index fund with the ticker symbol of FXAIX. Now, this fund currently contains over 507 holdings, has a current low cost expense ratio of 0.015%, has a 30-day yield average of 1.48%, and has a 10-year market return average of 12.65%. The upside is that you have no initial investment and has a low cost expense ratio, so it's easy to own and purchase this fund. All in all, any one of these index funds has potential to increase your overall performance in the long term as an investor, or give you a greater chance of increased success in the long-term future. Now, it is best to also consider that this is not financial advice, so always make sure to apply your research and comment down below on any sort of information or feedback that you have to offer.